All right, all right, all right, all right. All right, all right. All right, guys. Well, let's first, before we even get into all this fun stuff, yeah, we can add BBY if you want. I personally will not play this at all. It's a retail stock. Man, retail is just really creepy to trade, so you got to be kind of careful with everything. But I think that there'll be a little bit of action in it today too. So let's add that to the list for now. First, I want you guys to take a look at the market. First things first, right? You do a top-down approach when you think about your trading day. Top-down approach means first you look at the market, then secondary you look at your plays. You have two types of plays when you look at when you look at the market, you're gonna always have two types of plays, right? So first you go QQQ, then you have two types of plays. One is gappers, earnings, PR plays. These move no matter what the market is. No market matters, all right? The second part is your watch list. This comes from nightly homework. This is market dependent, but less if market is trending. Meaning that a lot of your plays will be market dependent on your watch list when the market's either in a range or a downtrend. But if the market is just trending up, down days the market gets picked up days the market gets picked up, they all go. Does that make sense? So now that we're up, even a little bit of a dip today, for example, say we've got all these different names on our watch list. If we dip down today, you would get some sell pressure on certain stocks, but it wouldn't tank your plays necessarily because the market itself is trending. So these are always the two things. It's like your top-down approach. You first go indexes, then you go into your different plays. That's where you want to always search with this thing. So if we're thinking about what the Nasdaq's doing, we pulled back to 20 SMA. We remounted over the 9, which is very important, right? Which is very, very important. Now we're busting out back to all-time highs. This is a very common kind of pattern too when you're thinking about just like general indexes. You'll dip down to the 20 and then you kind of pull right back up to 24. You got 24, 204. So this is like what we call just the dip and rip. You pull back to 20, you remount the 9. Very powerful. We got a flat opening on the market today, which is awesome. The best days to day trade in particular, I find, are usually flat days in the market. When the market just makes its move like yesterday, when the market makes its big primary move like in the first 15, 20 minutes, you're left without range the rest of the day and you just don't get any heat. So if you ever see when the market makes that kind of big move, if you're ever just sitting around the rest of the day, yesterday I left it almost right after lunch because there just wasn't any heat left in the market. So flat day is going to be good because we may be able to go down, up, the different possibilities are available to us. I think that's going to be a really, really important. So let's think about on the upside, what are some earnings plays. This GBT is busting out here. You got a 64 breakout, and its all-time highs is right around this edge. So if you look at the weekly chart, you got a trend line break here. So you got tested at 68, then you came back up here at 64. Now you're busting back over it again. Your float on this is only 46 million. Okay, so when you're thinking about is this a potential play for us due to the the PR and the earnings? There's a handful of things that we always want to be mindful of. Number one, obviously you have a breakout and it puts all-time highs into place. Number two, the float on this is 46.1 million shares. All right. 46.1 million shares. So that becomes really important too. The second part is what? What's the second part on this bad boy? That's, I think, really, really important. Anybody now? Now, stochastics in this kind of market will be meaningless. But I think that the fact that this is a biotech stock is going to help too. All right. In this market, biotechs are very, very hot. So we've got, think about like all the big movers of the last, couple months, like KRTX and so on and so forth. I'm not saying that's going to be this because this float's too big, but in general, biotech has been hot. So that's where a focus is going to be. If you have, like, say, 5 earnings plays, biotech and tech are the 2 spots that you want to meander towards. Like, for example, Dix. Like, Dix is a retail stock. Like, you've got an earnings play over here. Is it really going to move that fast? Like, we always put Dix on our watch list just so we can say, like, Dix all day, which is also kind of cool. Also kind of cool. But you always go with biotechs to do it anyway. So just a little bit of kind of different little flavor. CCXI, this thing is up already 322%. I won't be playing this one at all, but you do have some type of breakout to all-time highs. When you think about like a possible good move, you've got 16 million share flow, which is much lower, $462 million market cap, so it's a fairly low market cap. The gap is really, really big on this one, though, right? 1.4 million shares. What I'll have to see is what the spread is like. If the spread is actually decently wide, then it may have a chance to really get going, like if it takes up these pre-market highs. This is one of those ones that can be a heartbreaker, though. Best thing to do on this is either you get an opening drive, like a big opening push right off the bat, like if you break over, your pre-market highs and you ORB, or you pull back and then round at the 9 EMA. So those are like the only 2 things that you want to do. Ideally, on a play like this, you'll pull back and then it'll start to round. Say you pull back to like 30. That'll shake everybody out a little bit. You start to round and round for like, give it maybe like good 30 minutes, maybe even an hour, and then you start to cruise up. That's when these things can get really powerful after that initial shakeout, okay? Now you got NTNX. NTNX got earnings out. This is actually very important. It's finally breaking over its 200 SMA. If you see NTNX, it has only been, let me go over here real quick. Hold on. So if you look at NTNX, this is its 200 SMA. It's only been over, hey Nick Potter, how are you doing, by the way? It's only been over its 200 SMA for how long? It really hasn't tested it since October last year. Like it spent a kind of like a month over it, and then it was gone again. So it's been weak for a long, long time. Second part that I find positive on this, guys, write notes on these things on your different plays. This type of pattern has been more powerful than breakouts in the last, I would say, 1 month. The bottoming pattern, like stocks that have been low, that have been showing some type of bottoming, that has been the go-to play. Like you're seeing that all over the place where you see this, it's like it'll look kind of like a W. And, you could just call this, it's just a bottoming pattern. So essentially we call this base breakout in our bootcamp class. So what I mean by base breakout is, okay, a stock that's usually down 50%, the rules for base breakout. Stock that's down 50% or more from its highs. And then you spend months, in equilibrium. You spend months in equilibrium just evening out. Buyers and sellers are at equilibrium. You start to even out. Now you're getting some type of PR, get it out of range. So I do enjoy the overall look of this one. I think this one will be in play. It's also in tech. My one worry on this, it's a little bit thicker, but don't worry about this, the thickness of it. Like you can see, like sometimes a little bit of a thicker stock can still go if the chart is hot enough. Like you see SPLK, right? Yesterday, just like a very, very simple red to green pattern. This is like a very kind of, I would say just, it's not easy pattern, but that's like really a nice pattern for like second day. That's like the best pattern you can do for second day plays after earnings. So like, first day plays, you're always kind of, looking for the earnings. But the second ones, the red to green is really the best one because it catches people off guard. So I like this overall look on this one. Also on NTNX, but it could be a little bit thicker. It trades different than Splunk. Edit. This is also, you got some type of PR out the last couple days. You can see over here, like you ended up with, this is what we'd call like a quick pullback buy setup. So when you get a breakout, and then you pull back, right? You get this like green candle to hold at the 9 EMA. That's called quick pullback setup. So there's two different types of plays you're looking for, right? One is the opening range breakout where you take out the opening range. The second one is if you pull back to the EMAs. Now today this thing is gapping up again, so we would look for a similar type of pattern. You either get a 3 candle pattern, you push up, you go sideways for 3 candles or more, or you pull back to the 9 EMA and you're good to go. So this one looks pretty good. And then BBY is busted loose too out of this kind of this bigger term range. This thing is retail and it's thick. The odds of me playing this one are very small. I would say small to minimal. But for some of you guys, like if you like a little bit slower stock that will grind higher, then definitely put it on your list. You can put Dix and BBY on your list, but for the most part, you don't want to be, you don't want to put too many of them. All right, now let's go on the downside. There's quite a few on the downside that are starting to look good. Movado. So they're busting loose. Movado misses estimates on EPS and lowers full year guidance. So there's like a holy trifecta of bad earnings. The holy trifecta of bad earnings is if you miss and then your revenues miss. Like right now you're seeing a lot of people like their revenues might miss, but their earnings hit, or their earnings hit, their revenues miss. The holy trifecta is if you miss estimates on and you lower, revenues, and your revenues miss, you miss your earnings, and you lower guidance. Woo! That's the holy trifecta right there. That's what we call the triple trinity. So I do think this will be in play. If this thing busts loose under 20, even at the open, if we ORB down there, I'll take this thing shred short. 2 worries on this one. Does anybody see them? Nick, what do you see on them? I got 2 worries on this one. Anybody know? Yeah, so retail stinks. The second part I think is going to be liquidity. You're not seeing very much pre-market. It could only have maybe a few 100,000 shares at the open pop off. If that's the case, then we can't. If that's the case, then we can't hit it. Does that make sense? Good. Boy, this DLTR and PanW are looking zesty. These are going to be our 2 plays I have a gut feeling on. DLTR moves a little bit better than most retail stocks, so I'm actually going to keep this on the list. You've got to break under the 200 SMA, which is important. Your 200 SMA signifies 2 things. When you think of moving averages, your moving averages signify 2 things. One is trends, long-term trends. The second part that moving averages do is they act as areas of support and resistance. So breaking under this is going to be very important on this one. You can already see it's got a good range, and you're starting to build like a nice little level over here. If I start to ORB right around that right around that spot, man, I'm taking that thing down. What do you think? I'm taking it down. It's gonna move a little bit thick, but it can grind down. We saw maybe a couple. When was the last earnings here? Here it was. Sometimes you can add this. Hold on, watch this. Let me see. I think it was this day over here when you got these gaps. So it does have some range. Like we've seen this thing over the period of a few days. We've seen it move before. You know, I used to have a little button where they'd put like an E on when the last earnings were, but I can't figure out how to add it back on. It's all good. Corey, what's going on? Yeah, so let's add this one to the list too. And man, this Pan W. Hey Elder, how you doing? Corey, I figured you were gonna be all up in that NVIDIA game. I just knew it in my heart. This Pan W is gonna be nice. I think you got room down to like 223. This is tech, so tech can go right off the bat. Shreyas, make sure you have your fingers on the trigger. Sometimes you miss the ones that happen like right at the open. Keep an eye on this one. It could just shred down like really, really quickly. And even if it doesn't, right, you go 100, 100, 100, 100, and kind of get the size you want. Try not to go 1,000 on this one. I don't know how liquid it's going to be. I watched it yesterday a little bit, but I like this one a lot too. Especially if it breaks down under 228, we may just shred down like 5-6 points the first 2-3 minutes. Okay, chunk. Yeah, there's some Brazilian stocks showing up. What's going on in Brazil? Hello, this is Paul Singh, the market speculator. Today we're going to look at some Brazilian ETFs. Okay, so we got some news out in Brazil. Futures slip lower and downbeat Chinese data, blah, blah, blah. Stalled U.S. trade talk, blah, blah, blah. Do you ever notice, like, anytime there was a PR a couple months ago that said stalled Chinese trade talks, right, the market tanked. Now, yeah, all of a sudden the trade talk deals don't really move the market as much. That's the beauty and the power of trends. You see all this junk. I probably won't play Brazil. These kind of foreign ADRs, they can be really, really tricky. So let's shred this thing. Cool. Alright, so that's the gapper list. Am I missing any that anybody thinks we need? Alright, so this is the gapper list. Let's have some fun with it. UGAS, let me tell you something about UGAS, DGAS. UGAS, DGAS are like the two damn hardest stuff to trade. I know that some people purport that they trade this kind of stuff, but look, like yesterday this thing gaps down $2. It just sits around. Like, you can't really trade this thing in a 25-cent raise. In a range, at least not day trade. Like if you wanted to kind of swing trade this breakdown, maybe, but do you really want to short natural gas going into winter? We could have polar vortex any day these days. You know what I mean? It's very, very tricky. You guys are the two worst ETFs to play, and the reason is in absence of trend. Look at this. This is like the ETF for DGAS. In absence of trend, you just have like this hodgepodge poo-poo platter of despair where you get a couple days up, couple days down, couple days up, couple days down, couple days up, couple days down, and before you know it, you're just kind of nowhere. It's tough. I think there's easier plays out there, so there is ways to trade it. I think if you're going to even trade it, I'd rather you trade the natural gas micro futures That's probably the easier way to do it. They seem to move pretty clean. All right, so these are a gappers list. I'm sticking to it. Cool. Now let's go into the regular list. Let's shred this from number one, our favorites, to the non-favorites. Always important. When you have too many plays in a hot market, you want to go favorites to non-favorites. All right, so favorite for today, favorites for today. And you'll never have a favorite. ARWR was a monster. I mean, it was a monster on yesterday. Man, I had this thing too, like right at 54 bucks. You got a nice flag break, ran to 60, so you got good range here. Do you notice this? That's a $6 range. This is very, very tradable. Now you're starting to creep up already pre-market. If this thing takes out the high from yesterday, and you start to, it may do it the first candle, or it may pop through and do an ORB. This one's going to have a chance. So, just be mindful of, the location of these things, but you got yourself a chance on this bad boy. I like this one. It's got good liquidity too. We were watching it yesterday. It's not terrible to get in and out. So I like that one. That's number one. Number two, STNE had a rest day. It had a rest day yesterday. You can see it kind of popped up here again. I think that a lot of times you'll see this. It's almost like an ORB where you've got yourself nice push here. And Chuck, I want to see more range. You got a nice push here, a sideways day. You come in on the third day and take that out. Like you can have yourself a little bit of fun. Chuck, sometimes these stocks like Miles, like this is not in a trend and it doesn't really move around much. Look at this. So like, for example, like Chuck, when you are looking at a stock, always think about the plays that we do and then how it moves. So like, for example, we do a lot of VWAP plays. If you took this thing out to VWAP, and it ripped like for 3 hours, supposedly, it moved 20 cents. So, you got to think like, all right, man, I'm going to get this sick VWAP trade, and then you're going to sit there for 3 hours, get that 25 cents? I know you're not. Same thing with UA. No range, no pattern. I want hotter. This one is a little bit better. This one's got much more range. Still 500 million share float, so it's a little thick. I want hotter. Hotter. Good. All right, let's go back in this. So we got ARWR number one. Man, I have this gut feeling that crowd is coming out of range today. I'm not gonna put this as number two, but it's in the top five. All right. INMD, big close on Friday yesterday too. So there's a couple things that happened on this. Number one, you had to bounce off the 20 SMA. You see this bad boy right here? So it's an IPO stock. You had to bounce off the 20 SMA, 2 million shares in volume, which is pretty good. You even started the ORB right at the open. So this one had really good range, $5. I like this kind of range. You got an ORB over here, then a quick pullback buy. I think this one could give us a day two. You're already starting to see some strength in the pre-market. The one thing with the INMD that you got to be aware of, liquidity. Even though it did 2 million shares in volume, at the open it was like 500,000, maybe even a little bit less. So you can't get too carried away on this thing. You got to go in like, I would say, quarter side. So like say you wanted to buy like for something of this price. For me, I'd want to probably buy like 1,000 shares to 1,500 shares. With this type of liquidity, I would go in with maybe 300 to 400. So if you're more into like 300 or 400 shares, you would probably do like 100 to 150. And you can still get good range on it. It moves $4 or $5. You just got to always be aware of liquidity. I've had a lot of times in my life where I've literally just put my nuts in a vice, and a rusted vice, and squeezed them because I had too many shares of a stock with the dollar spread, and then the bid dropped out, and you get into this like, should I sell, not sell? Should I sell, not sell? I don't want to sell in the bid and lose that extra dollar, and then bam, 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 like you just smoked out. Peloton, I think Peloton could break out today too. Man, this is a lot of hot stocks in this market. You can see here you had that $30 breakout into the close. Man, this thing is... This thing is hot. Add Ping to the watch list. Ping is taking out these highs. It stalled right at its all-time highs. You can see this zone over here is just really important, 21. As long as it hangs over 21, this one's got a chance. The range on this is pretty good. The liquidity is not that good. So you gotta be a little bit careful, but it looks pretty good. I added a couple watch lists. I'm making a concerted effort to add, keep 2 to 3 to 4 swings in my account at all times. This setup has been working picture perfect, by the way, which is when you get this like kind of big breakouts with the good range, they pull back to the 20 SMA and then they remount the 9. That's like a pure momentum setup. We could even call it just a pure Momo. You know, so you hold at the MA, you remount the 9, and you're good to go. You know, I like this one for potential swing. I mean, your risk on this one is $1 to maybe break out here over 32. So minimum $3 to $4 for risking, $1. I like the odds on this one. Looking at this cross too for a little bit of a compression kind of breakout here. When you have like stocks that have this kind of earnings or some type of push out, and they consolidate like this, if it breaks out over 73, this one could work to only 56 million share float, and it kind of runs with Apple, which is nice. So this is like, this is only for swing too. It doesn't do enough liquidity for me to day trade. Frankly, when you swing trade, a little bit of the lesser liquidity stocks, they tend to move, I want to say less liquidity, but they move really well because you just get a few hundred shares, and like you see the stocks that are like 500, 600, 700, 800,000, you see them move like $5, $10 all the time over the course of, like say a week, but you can't really day trade them. You can't get the size you want, but you can totally, rip a swing in a couple of these. And then I got Voya on watch for potential swing too. This one looks, beautiful. The only thing is this is like an asset management company, so I don't know how fast it's going to move. But we used to trade this back in the day, and it moved okay. This one may be a little bit slower, so fuck it. I'm taking that off the list. I already talked myself out of it. All right, and I got PDD on watch for potential short here. You're fading off at resistance. You got some levels here that are holding up. This one could fade off. This one could fade off really, really quickly. So, guys, that's the list. We know what we got to do. It's showtime. It's go time. It's been fun times lately. Yesterday's a little bit slow, but we're gonna have ourselves a little pizza party and get this going. Woo! Yeah. All right, let's do this, guys.